Welcome to Wealth Creator Radio. I am Luann Fulmer, joined today by Eric Heckman. He's president and founder at Heckman Financial. And end of year planning can be vital for those of us planning to retire, right? But is there more to it than just taking care of the basics? And that's what we're going to talk about today with Eric. He's going to share some more advanced financial planning strategies that we could look at and take advantage of as we look into 2026. All right, let's get started with that phone number that you'll need today for our show. 800-454-1184. That is the number to call. You can text the word visit. You can also text the word toolbox and get the digital toolbox that includes a lot of resources and Eric's book that he wrote, okay, Worry Less Wealth. So text the word toolbox to 800-454-1184 as well. Remember, this show is also available on podcasts. So it comes out every Tuesday. Just look for the name of our show, Wealth Creator Radio. And you can find us on YouTube and anywhere else that you get your podcasts. So wealthcreatorradio.com is our website. We'll be referring to that throughout our show. Eric, welcome to you, and tell us what sets these strategies that we're going to talk about today apart from the basics of financial planning.
Yeah, well, I mean, every calendar year end, when that ball drops in New York, right, and we roll over to the next year, everything tax related is over and done with.
Mm-hmm.
And it is what it is. There's not much you can do when you're getting to March and April to do your actual taxes. That's more like reporting at the scene of the crime. That's just, here's what happened. Nothing we can do about it. Very tiny bits that you can do. So really what we're trying to do is figure out, well, what should I be doing right now that can make that a better picture? Not just for this year, but for my lifetime taxes. Because that's a lot of times people ask the wrong question. They ask the tax person, how can I save money today? But the correct answer, or correct question, I should say, is how do I lower my lifetime taxes? And that's usually when most tax people go, I don't know. Go talk to your financial advisor who knows taxes. And,
Right.
Yeah. And so exactly, this is why you need to talk to somebody who can actually help you with that. Because I don't like this whole finger pointing. You go talk to that person, you go talk to that person. Nobody helps you. So yeah, that's what we're trying to help people with today. And that's why we're doing the show, right?
Yeah, exactly. And I do love that. Heckman Financial can do taxes and tax strategies as well, tax planning. So we're going to start with taxes here as we go through this. And tell us what we can do. What should we be considering before end of year as far as advanced tax strategies, Eric?
Well, there's a couple things. What type of year was it for you, right? Did you get laid off? Did you have a job change? Things like that. So sometimes when people had a lower income year, it makes a lot of sense to do Roth conversions to pay some of that tax now and just avoid that tax for the rest of your lifetime. And so that can be really good in a year that's down, or maybe you've retired and you don't have as much regular income coming in. That can be one option. Tax loss harvesting is another kind of fancy term. Right now, the S&P 500, there's about almost half the stocks are negative and half the stocks are positive for the year. So if you have some gains this year, you could actually sell some of those losers, offset the two, they wash out. And, that's one way to mitigate a lot of taxes. And there's studies that have been done that if you do this the right way, you can add about 1%, 1 to 2% over, annually to your returns by just having the tax savings. Obviously, it's only for taxable accounts. Doesn't matter for your IRA.
Okay.
But,
yeah.
And then also the other thing too is just charitable donations. There's a new thing this year for charitable donations where anybody, even if you do a standard deduction, can write off $1,000. So that's one thing is, make sure you've done some before year end. But also if you've got a stock that's shot up a bunch and, you can donate that stock instead of donating the cash. Well, the nice thing is you don't have to pay tax on that sale of that stock. You get the full write-off. Charity gets the full amount of the money because they don't pay the tax either. And so you both win. So there's some actual tax planning that you want to do. Hard part, of course, is getting short on time, and yeah,
Yes.
gotta do something quick. So, again, that's why people, might want to reach out and figure out, okay, what can we do? How can we help? So if you do have a tax issue, you do want to do some year-end planning. Best way to do is just text the word visit to 800-454-1184. Again, text the word visit 800-454-1184, or you can click the link below if you're watching online.
Well, thank you so much for joining us today. This is Wealth Creator Radio with Eric Heckman. I'm Luann Fulmer. And Eric, you mentioned Roth conversions, and they seem to be so popular. So why don't you go through those again and explain how they could be a good tool to use for tax strategies end of year?
Yeah, it's like pay me now, pay me later. That saying,
Yeah. Yeah.
and and so most people are in the pay me later mode, and so they say, oh well, here on the defer this tax, I'm not going to pay tax on this money I put in my 401k, my IRA, my 457, 403b, all those things, right? So sounds great because you don't have to pay the tax, don't have to pay tax until they hit retirement. And then people are like, oh my gosh, how much do I have to pay in taxes? I thought it was going to be in a lower tax bracket retirement. And it's like, sorry, there was no guarantee for that.
Right.
And, so more and more of our clients are actually having the same or higher taxable income, not adjusted gross income, but taxable income, because they don't have as much write-offs, other things.
Mm.
And so that's why Roth conversions are a way to take some of that money, pay the tax today, which is painful. Nobody likes to do. But once you've paid it, it's gone. There's no more tax to pay ever. So say you do a $20,000 conversion, that 20,000 is yours. If that 20 grows to 50, all 50 is yours. But if you put that 20,000 in an IRA or 401k, if it grows to 50, you owe tax on the entire 50,000. And that can be a lot of tax. And if you have a lot of money that's all pre-tax, guess what? You're going to hit retirement and all you're going to have is taxable income. There's no tax planning possible. It's just pay it. And that's not what we want for our clients.
No, and that worries. I think that worries all of us, it really does. Now, so the other thing we have to worry about then regarding taxes are those RMDs, right? They're forcing us to take money out of our accounts and pay taxes. Talk about that, what we need to consider with those towards end of year.
Yeah, so this is for our office. This is our big. We're kind of like Santa. We've got a list, and we got the naughty and nice list. And the nice list are the ones who've taken their requirement of distributions. The naughties are the ones who haven't yet. And we're having to go through all that. And this used to be 70 and a half, then it moved to 72. Now it's even more confusing because now it's 73 or 75 if you're born after 1960.
Right.
But so for people 73 now and up, yeah, they have to take some money out. Now, if they've got plenty of other money because they've paid off their house or they got other money investments or pensions or Social Security, other stuff coming in, IRS does not care. You still have to take that money out. If you don't take the money out, it's a 25% penalty. Plus, you still have to take it out. So, yeah, you don't want to do that. And so that drives up people's tax brackets. It's taking out 4% of your retirement and it grows year by year how much percentage you have to take. And yeah, people don't realize that all this deferring now built you up into some huge tax bracket. And a lot of the numbers we're showing for people in their mid 70s that they'll be at a higher bracket than when they were compared to when they were working, which is just crazy.
It is.
Yeah.
All right. Well, we have to take a break. So this has been great. Good information for end of year planning. Eric, that number again to call if you want some guidance on these strategies we've been talking about. 800-454-1184. You may call the number. You can text the word visit and you can text the word toolbox. Get Eric's book. Okay. And a bunch of resources, including taxes. So we'll be right back with more from Eric on Wealth Creator Radio.